Have you ever considered the financial impact of our environment, or perhaps how financial decisions can shape our environment? Welcome to the intriguing world of environmental finance, where the realms of ecology and economy intertwine in a fascinating dance. This is a field that merges the financial world with environmental sustainability, a critical juncture in today's world. Environmental finance is the compass guiding us towards a greener future, while ensuring the wheels of economy keep turning. It's the key to unlocking green investments, channeling funds into projects that are not just profitable, but also beneficial to our planet. It's the bedrock of sustainable financing, a strategy that takes into account the long-term health of our world while achieving financial goals. And it's the driving force behind ESG trends, where environmental, social, and governance factors become crucial in investment decisions. Dive into the world of environmental finance where money meets sustainability. This is where your financial decisions can make a world of difference. Imagine investing in a future that not only brings financial returns, but also a sustainable planet. Now, let's dive into the realm of green investments to better understand this concept. Green investments, also known as environmentally friendly or sustainable investments, refer to the act of allocating funds towards projects or ventures that are considered beneficial to the environment. These investments aim at promoting sustainability and fighting against climate change, all while offering a financial return. Quite an attractive proposition, isn't it? Examples of green investments are as diverse as the shades of green in nature. This includes ventures like renewable energy projects such as wind farms, solar power stations, and hydroelectric facilities. These investments help reduce our reliance on fossil fuels and mitigate the effects of global warming. Another popular avenue is green bonds. These are fixed income instruments designed to fund projects with environmental benefits. Issued by governments, banks, or corporations, these bonds are an excellent way for investors to contribute to environmental causes while also diversifying their portfolio. But the question is, why should one consider green investments? What are the benefits? Well, the advantages are twofold, encompassing both financial and environmental aspects. From a financial perspective, green investments can provide stable returns over the long term. With increasing regulations and incentives supporting environmentally friendly projects, these investments are gaining momentum and becoming more profitable. On the environmental front, green investments contribute directly to the fight against climate change. By funding projects that reduce carbon emissions or promote sustainable practices, investors can make a tangible impact on the planet's health. It's a win-win situation where you can grow your wealth while also helping to safeguard the environment for future generations. Green investments, therefore, are not just about the green in your wallet, but also the green in our world. They represent a shift towards a more conscious and responsible form of investing, where financial gain doesn't come at the expense of our planet. And that's a future worth investing in. What if every financial decision you made also contributed to a healthier planet? This intriguing question leads us into the realm of sustainable financing, a powerful concept that intertwines finance with environmental responsibility. Sustainable financing, in essence, is a financial approach that considers environmental, social, and governance factors in investment and business decisions. It's not just about making money, but also about ensuring that the way we make money doesn't harm our planet. Think of it as a financial ecosystem that thrives on the principle of doing well by doing good. So, how does sustainable financing work? Well, it's all about channeling funds towards sustainable projects and ventures, those that contribute positively to the environment. For instance, a bank might provide a loan with favorable terms to a company that's developing renewable energy solutions, or an investor might put their money into a business that's committed to reducing its carbon footprint. The importance of sustainable financing cannot be overstated. Our world is grappling with the effects of climate change and environmental degradation, and we need all hands on deck to combat these challenges. Sustainable financing allows businesses, governments, and individuals to play their part in this fight, not just through direct environmental actions, but also through their financial decisions. Take for instance the case of a large multinational corporation that decides to issue green bonds, a type of bond specifically designed to fund projects that have environmental benefits. The money raised from these bonds can be used to finance everything from renewable energy projects to water conservation initiatives. This not only contributes to environmental sustainability, but also attracts investors who are keen on supporting eco-friendly ventures. Or consider the role of sustainable financing in government policy. Governments can and are using sustainable finance to incentivize green practices among companies and individuals, such as offering tax breaks for investments in renewable energy. Sustainable financing, thus, is a powerful tool to drive environmental change. It's a tool that enables us to align our financial decisions with our environmental values, to create a world where economic growth and environmental sustainability go hand in hand. Are businesses just about profits, or do they have a role in shaping a sustainable world too? This question brings us to the rise of ESG trends. ESG stands for environmental, social, and governance, three key factors that measure the sustainability and societal impact of an investment or a company. In the past, businesses were primarily judged by their profitability. Today, however, there is a growing emphasis on their environmental impact, their social responsibility, and their governance structures. This shift has led to the rise of ESG trends, which are increasingly shaping the way businesses operate and investors invest. Let's dive a little deeper. The E in ESG stands for environmental considerations. This includes how a company's operations impact the environment, whether it's through carbon emissions, waste disposal, or resource consumption. The S stands for social factors. This can include how a company treats its employees, its relationships with the local community, and its stance on human rights. The G stands for governance. This relates to a company's leadership, executive pay, audits, internal controls, and shareholder rights. These factors are all interconnected and are becoming increasingly important in the business world. Businesses that prioritize ESG are often seen as more sustainable and responsible, which can make them more attractive to investors. Let's take a look at some examples. Companies like Patagonia and Unilever are leading in the ESG trends. Patagonia, the outdoor clothing company, is known for its commitment to the environment and sustainability. Unilever, on the other hand, has set ambitious goals to reduce its environmental footprint and improve health and well-being. Investors, too, are paying attention. More and more, they are looking at a company's ESG performance when making investment decisions. They understand that companies with strong ESG practices are likely to be more resilient, more innovative, and better positioned for long-term success. ESG trends, thus, are not just a fad but a fundamental shift in how businesses operate and investors invest. They are reshaping the business landscape, and it's clear that they're here to stay. So, where are we headed in the realm of environmental finance? As we chart the course ahead, we find ourselves in a pivotal phase of history where economic prosperity and environmental sustainability are converging. The future of environmental finance is not just an abstract concept. It's a tangible reality taking shape right before our eyes. What does this future look like, you ask? It's a vibrant landscape filled with opportunities and challenges. The opportunities lie in the potential for unprecedented growth in green investments and sustainable financing. With global awareness about environmental issues at an all-time high, the demand for investment avenues that contribute to a healthier planet is growing exponentially. This is creating a fertile ground for innovative financial products and services that align with the principles of sustainability. But as with any new frontier, there are challenges to navigate. One of the most significant hurdles is the need for robust regulatory frameworks to ensure transparency and accountability in environmental finance. There's also the challenge of overcoming investor skepticism, fueled by the misconception that green investments yield lower returns. Yet these challenges are not insurmountable. They serve as potent catalysts for change, pushing us to evolve and adapt. And the exciting part is that each one of us can play a role in shaping this future. Whether we're investors, financial professionals, or simply conscientious citizens, we can promote environmental finance through our actions and decisions. We can choose to invest in companies that prioritize environmental, social, and governance (ESG) principles. We can advocate for stronger regulations to govern environmental finance, and we can educate ourselves and others about the importance of aligning our financial decisions with our environmental responsibilities. The future of environmental finance is not just about numbers or market trends. It's about a collective shift in mindset towards a more sustainable and inclusive economy. It's about recognizing that our financial choices have a profound impact on the world around us. And most importantly, it's a future that we have the power to shape. The future of environmental finance is promising, and it's a journey we are all part of. So, what have we learned about environmental finance? Well, we've delved into an intriguing world that intertwines finance and sustainability. Environmental finance is a vital tool in our fight against climate change, and its importance cannot be overstated. We've explored green investments, a promising avenue that encourages the growth of eco-friendly businesses. These investments not only yield financial returns but also contribute to a healthier planet. Sustainable financing, on the other hand, offers a holistic approach to finance, incorporating environmental, social, and governance factors into decision-making processes. We've also seen the rise of ESG trends, which are becoming increasingly influential in the world of finance. These trends ensure that companies are held accountable for their impact on the environment and society. In summary, environmental finance is a field that promises both financial prosperity and environmental sustainability. As we strive for financial prosperity, let's not forget that environmental sustainability is an investment we cannot afford to ignore.